Then on to some commentary coming in from the United States. In an exclusive interview with CNBC, the Treasury Secretary Stephen Mnuchin has tempered expectations of rapid growth in the U.S. economy. He says that high growth could be possible only by the end of 2018. He refused to speculate on the movement in the market or on the Fed's trajectory for interest rates. He did, however, say that rates were at historic lows, suggesting that there is a need to normalize policy.
If you look at long-term growth, we have underperformed where we need to be. And we believe that we can be competitive and get back to sustainable growth of 3% or more. And there's going to be a lot of things that will impact it. I think the first issue, as I mentioned, is going to be tax reform. I think the other issue is going to be regulatory relief. We need to cut back regulations that have prevented small and medium-sized businesses from being the engine of growth in this country. And we're also focused, as you know, on Dodd-Frank and looking at Dodd-Frank and making sure that banks can lend. There's an incredible amount of liquidity out there, and we want to make sure that banks put it to work. This is a mark-to-market business, and you see what the market thinks.
If the market were to pull back, is that just disappointment and things not getting done as quickly as market had anticipated, or do you just expect, you've watched the markets for a long time, do you expect a pullback at some point when you see things move so far so quickly?
Well, look, I've always been focused in the markets on not day trading and where they are day to day. So whether the market goes up or down on any given day, I've given up figuring out why that is.
Smart man.
So, but do I think that, over the course of the year, we're in an environment where there's very attractive investment opportunities in the U.S. And I think that's reflective of the administration's goals and what the market thinks of it. We're in an environment where we are at historically low interest rates. Mm-hmm. And I think if you look at this on a historical basis, we will probably have low interest rates for a long period of time. That doesn't mean that within that, there's not the context that interest rates can go up, and you've seen the Fed signal that. Mm-hmm. So again, I'm not going to speculate on what they're going to do, but my comments are really about where we are, not relative to just today, but where we are relative to where interest rates have been over a long period of time.
All right, that was some opinion.